Hello traders, welcome back to the channel. If you're watching this video for the first time, kindly consider subscribing. And if you're frequently watching my YouTube videos and finding value, getting value out of them, or helping you analyze or understand deeper ICT concepts, then please consider subscribing. That way you are helping this channel to grow. Today we want to go through step-by-step market analysis using ICT's concept. But before then, I'd like to make assumption on some ideal concepts that we will find useful during this analysis. I want to assume that you have gone through the 2022 ICT mentorship model and you have backtested it, traded on a demo account, and have found value or have grasped concepts. If you want a summarized version of the 2022 ICT model with clear notes, you can find them on the channel. I also want to assume that you have gone through the topics of order blocks and you have understood everything that pertains to order blocks, especially the mitigation block, breaker block. And I also want to assume that you have gone through the market maker model on the ICT YouTube channel. And I would always and highly recommend for watching the summarized version of the ICT concept on this channel. You ought to have gone through the concept and only come to this YouTube channel for clarifications and in-depth understanding, or to see how I understand the ICT concept and compare to how you have understood it to get deeper understanding of your own. So today we want to go through step-by-step market analysis using ICT concepts, and all matters kept constant and all assumptions taken into place. I'd like you to note that this is only limited to what we have covered on the channel. I have not only covered the market maker model, which I referred you to go and watch and make notes on them. So on the market can be bullish or bearish, and a trader can only take trades long or short. So let us assume that we want to go long or long entries. We are searching for long entries. What do we do? If you have gone through the market maker model, we have a way of doing our quantitative analysis, of which quantitative analysis is not being done on a daily basis. It's something that can be done once a week. You can do it either on Sunday or Monday, because court reports are being released on Friday, and the market interest rates, the global interest rates, are always there on the sites that you choose to check them on. Example of the site that you can find this data are given by Michael on his channel, and it's very clear on how to use them. But if you find it hard to understand that, you can always comment, and I will always do a summarized version of the market maker model. So while going long, we have already conducted our quantitative analysis, we are going to our qualitative analysis. On our qualitative analysis, we will do it on higher time frame up to the time frame that we are going to take the trade, doing the same thing on all the time frames. Like we can start on a monthly time frame, weekly time frame, daily time frame, 4-hour time frame, 1 hour, 15 minutes, and eventually take trades on the 1-minute chart. Or if you want to take trades on the 15 minutes or the 1 hour, whichever choice you make based on which trader you are. So, while doing our qualitative analysis, we wait for the price to move into higher time frame or point of interest, like the plus OB, which means the bullish OB, fair value gap, previous day low, equal low, sell side liquidity, and we execute on lower time frame, and we check on the market maker buy model, smart money reversal, and market structure break. While going short, we do the same thing, but we are checking on different POI, but different in the sense that they are just the mirror opposite of the other, mirror of the long entries. So if you understand that, so we have already discussed about the quantitative analysis and how it's being done and where you can get the information on that. Qualitative analysis, while we are going short, we wait for price to move into higher time frame, or like the weekly, daily, 4-hour, and we go for bearish order block, fair value gap, previous day high, equal high, buy side liquidity, and we execute on the lower time frame like the 15 minutes, 1 hour, and we keep an eye on the market maker sell model, smart money reversal, and market structure break. So this is basically what you look for, and after mastering this and the concept that we assumed, putting them all together gives you accurate trades entries. For this video, I'll give you a long entry on how I go about it, analyzing it step by step in hindsight. And after this, I will do a recording on another video, doing it before it happens. And you can only learn this skill when you go and practice it, backtest it, and journal it down. That is the only way that you will benefit from these summaries that I'm doing. So without much talking, let's go and see a long entry example. So first, we'll start on a weekly chart. On our weekly chart, I will, because this is an hindsight, I will assume that this particular area is my area of interest. I will put 2 horizontal lines, and on this side I want to see our point of interest. And the first point of interest that we included was a fair value gap. And you see, this is a fair value gap right here that the market respected. Market always respect these particular areas. So we'll come and right here 1 week fair value gap. This is a fair value gap. Assuming that this is the only candle that we are seeing and we are not seeing the rest of the candle. So after the market trading into this fair value gap, what do we expect? We expect the market to obviously go. So let's assume that this is the only data that we can see. And what rest above here are our buy side liquidities. So we will go the daily. On the daily, what can we see? Assuming that this is the only data that we can see. We have already made a decision that we are going long. The market is going long because after reaching this weekly FVG, we expect the market to go long. And this is our point of interest, the buy side liquidity. We don't know clearly up to where it will trade to. Maybe it will trade up to March of 2023. The market, the euro dollar will be long up to that particular point. We are not certain of that, but according to previous analysis that I did, we can be long to that particular point. We go back to 4-hour chart, and what can you be able to identify in this 4-hour chart? The 4-hour chart presents for us a breaker block. It's my hope that you know what a breaker block is. Here is the breaker block. Let me use black in that line. And after identifying this breaker block, the down candle, it moved up before it moved down. We'll create our market structure shift. It's a shift in market structures. It will because we are bullish. Use font 10 so that it can be organized. This is our market structure. You see this candle, the rapid move breaking structure, and when we want to confirm that indeed we are going up, the market is going long, then we use smart money technique or smart money tool for confirmation. And how do we do that? Smart money tool help us to confirm, in addition to our analysis, if we are going up or we are going long. So we will go and look at this particular area specific to the 25th on Sunday, September. to Wednesday 20th September on the US dollar index. We will check it against US dollar index. And for a confirmation, we want to see a mirror of this. What do I mean? If this is going upwards, a mirror of this will be going upwards. So you want to see a structure opposite to the one here. Then we had noticed that we noted that we should check on point of interest, the FVG. What you'll want to do on the FVG is to measure the 50% mark, which is exactly the 50% mark. So taking the 50% mark, that is your entry level. You should keep in mind that this market has not yet come to this 50%. So you will go to the 1 hour. We go to the 1 hour time frame. After going to the 1 hour time frame, you identify this, the 50%, the fair value gap on the 4 hour time frame. So this will be entry, and your stop loss will be below particular. Then you will identify on long entries market maker buy mode, like these areas that cause low resistance. What rest here is liquidity, and they are buy side liquidity. Particular area, what rest here is buy side liquidity. This particular point, buy side liquidity.
Fast, call it high speed. I've been working hard, yeah, I've been working nightly. If you think you'll win, not likely. I be taking shots, yeah, cold.
And after identifying this, you encounter a downward fair value gap that broke structure. This probably was caused by a move, news move. You want to highlight this one. So we'll use that to highlight fair value gap, and it's should keep in mind that it's 1 hour fair value gap. 1 hour fair value gap. So this particular point, even though the market is bullish, at this particular point we will see a significant market reversal after hitting this particular point downwards, then move. That is my expectation. So this will be your first entry, taking profit this particular area. You have profit to this particular area for targeting area if you're patient enough to wait for it to come this particular point for targeting area, depending on which trader you are. So we see there are multiple trades that you can also take these areas. So the market trades to taking out those buy side liquidity and trades of this particular area going downwards to our entry point. Remember, this was our entry. After going back our entry point, market trades up this point, and remember we had 1 hour fair value gap in mind. 1 hour fair value, so it trades the 1 hour fair value gap, then reverses. After doing some back testing, you will know, or you will come up with a story on why the market was at this particular point. Then market traded, but this time it not go back to our entry point. It took this liquidity, the sell side liquidity that rests below here. So we have liquidity resting below this particular area, and it's sell side liquidity, remember. So this sell side liquidity resting below that particular area. Protecting the liquidity, the market rallied up, and at this point we expect the liquidity that was created above here to be taken out. That is our expectation, huh? And this is buy side liquidity. Buy side liquidity. The market goes and creates liquidity before rallying down. Trade into there. Let me highlight it. The bullish order block here. We're trading to this bullish order block, which creates sell side liquidity. Market rallies and take this buy side liquidity. Because we said our analysis, our quantitative and qualitative analysis, so that we were bullish. So this was news, probably, and here we are going up. So you see how the market moves up to this particular point. So that's how I do my analysis, keeping the point of interest in mind, doing analysis from the higher time frame to lower time frames, and knowing what to look for. So that's basically how the 2022 ICT model works. And if you do that from the high time frame, let's say from monthly to 1 minute, depending on the trader you are, if you're swing trading, day trading, whichever trader you are, do the same thing. And that's basically how being done. Let's meet on the next one. Bye bye. Liquidity. Particular area. What rest here is buy side liquidity. This particular point, buy side liquidity. And after identifying this, you encounter a downward fair value gap that broke structure. This probably was caused by a news move. You want to highlight this one. So we'll use that to highlight fair value gap, and it's you should keep in mind that it's 1 hour fair value gap. 1 hour fair value gap. So this particular point, even though the market is bullish, at this particular point we will see a significant market reversal after hitting this particular point downwards, then move. That is my expectation. So this will be your first entry, taking profit this particular area. You have profit to this particular area for targeting, if you're patient enough to wait for it to come this particular point or targeting area, depending on which trader you are. So we see there are multiple trades that you can also take these areas, looking at the point of interest. Like here we have order block formation. The formation of this is a bullish order block. Which wasn't respected. But you can lower the time frame. At this particular point, we want to say that we're making our entries on the 1 hour time frame. That's why I'm looking at the 1 hour time frame. So the market trades to taking out those buy side liquidity and trades of this particular area going downwards to our entry point. Remember, this was our entry point. After traveling, after going back, our entry point, market trades up this point. And remember, we had 1 hour fair value gap in mind. 1 hour fair value gap. So it trades the 1 hour fair value gap, then reverses. After doing some back testing, you will know, or you will come up with a story on why the market was at this particular point. Then market traded, but this time it did not go back to our entry point. It took this liquidity, the sell side liquidity that rests below here. So we have liquidity resting below this particular area, and it's sell side liquidity, remember. So this sell side liquidity resting below that particular area. Protecting the liquidity, the market rallied up, and at this point we expect the liquidity that was created above here to be taken out. That is our expectation, huh? And this is buy side liquidity. Buy side liquidity. The market goes and creates liquidity before rallying down. Trade into there. Let me highlight it. The bullish order block here. Trading to this bullish order block, which creates sell side liquidity, market rallies and take this buy side liquidity. Because we said our analysis, our quantitative and qualitative analysis, so that we were bullish. So this was news probably, and here we are going up. So you see how the market moves up to this particular point. So that's how I do my analysis, keeping the point of interest in mind, doing from bottom up, doing analysis from the higher time frame to lower time frames, and knowing what to look for. So that's basically how the 2022 ICT model works. And if you do that from the higher time frame, let's say from monthly to the 1 minute, depending on the trader you are, if you're swing trading, day trading, whichever trader you are, do the same thing. And that's basically how being done. Let's meet on the next one. Bye bye.